Wall Street Wrap-Up is supported by Bamboolas, featuring live music. And now, tapas and wine upstairs. Bamboolas, the heartbeat of Frenchman Street.
This week on Wall Street Wrap-Up, the House and Senate pass a short-term bill averting a government shutdown that was scheduled to start at midnight tonight. Shipping in the Red Sea is being diverted because of Houthi rebels causing longer delays in shipping and of receiving goods. The Biden administration forgives student debt, even though the Supreme Court in last June said that they're not able to. So is there a possible another reason? We'll explain the backstory. And this week in Davos, Switzerland, CEOs and world leaders gathered sort of a Woodstock for those with private jets. And are they seeing a Trump win in November? You may be surprised of what they're saying. And with Iran backing terrorist groups and Russia's war with Ukraine, where is oil headed this year? Tonight, we're going to be talking with Bob McNally. Bob is the president and founder of Rapidan Energy and former special advisor to President George W. Bush about Iran, OPEC, and Russian oil. What are we looking at paying at the pump this year? Bob's also the author of Crude Volatility. How will these world events be affecting energy prices? We've got a lot to cover for the next 28 minutes, so join us because this is Wall Street Wrap-Up. Hi and welcome. I'm Andre Laborde. I hope you had a great week. Well, before we begin, an update from last week's show when we were talking about China's economy and military with expert Dennis Unkovic. This week, it was reported that China's growth rate is at its lowest going all the way back to 1976. And the rate of newborns last year in China is the lowest number since the founding of the People's Republic of China in 1949. And around the world, stock markets, China, well, they've been taking a beating. The China's Shanghai Composite, which is down just over 12% for the year, as the Chinese Hang Seng, which is the Chinese version of the New York Stock Exchange, that's down almost 30% over the last 12 months. As compared to Japan, they're up 35%, and the U.S.'s S&P 500, they're up over 18.5%. And Congress sends today a stopgap bill to avert a government shutdown that was scheduled to go into works for midnight this evening. The funding bill continues the money flowing at least until March, where either it agrees to fund the government or it's pushed back once again. Now, if they push it back again, automatic spending cuts of 1% across the board would trigger and go into effect. You know, you'd never run your own house or business this way. So how did our money do this week? Well, the pops today were led by technology, energy, and industrials. And the drops for the week were communication services and consumer discretionary stocks. It was a four-day trading week due to the Martin Luther King holiday on Monday, and the Dow Jones closed this week at a record high. And it was, by the way, also a record close for the S&P 500 as well. Well, this week, the Dow Jones, they closed for the week just under 0.7%. The S&P 500, they closed up just over 1.1%, and the NASDAQ, they closed for the week just over 2.25%. Last week, Hertz announced that they were selling or getting rid of 2/3 of their EVs because of high repair cost. Now, according to LexisNexis Risk Solutions, that's an insurance data service, when drivers switch from gas-powered automobiles to EVs, electric vehicles, both the frequency of insurance claims plus the extra amount paid for repairs, they rose to just over 14% for both. And tens of thousands of student borrowers are going to see their student debt wiped away. Or will they? The Biden administration is forgiving 74,000 borrowers of government student debt. The bulk will go to people who work in public service for more than a decade. Now, last June, the Supreme Court rejected the Biden administration's student loan forgiveness, saying that only Congress is able to forgive the debt. The Supreme Court ruled that the president has only the power to suspend and not eliminate student loans. But, well, the Biden administration, they're doing it anyway. Well, this week was the World Economic Forum, Think of it as a Woodstock for CEOs and world leaders who fly in once a year to a little Swiss town called Davos and discuss issues such as climate change. Well, this year, a major topic was a possible Donald Trump victory in November and a return to the 45th president. And according to those at the conference, because of business, they were, as they put it, no cause for concern and were preparing for a Trump victory. And now, or even are they pricing in a possible Trump win? They were calling it there the Trump trade because, well, as they were saying that because they're wanting to maybe hedge their bets, who knows? Well, so where is oil headed into 2024? Are we going to pay more or less at the pump because of with Iran funding terrorist organizations? Tonight, we've got Bob McNally. Bob is president and founder of Rapidan Energy Group, and he's also the author of Crude Volatility. Hi, Bob. Welcome to Wall Street Wrap-Up.
Andre, it's great to be with you. Thanks for having me on.
Bob, 2 years ago, in 2022, energy stocks were booming. Oil prices were going up, barrel of oil. But then in 2023, the energy sector was laggard, and energy oil price per barrel had been low. If you could take out your crystal ball, I mean, we're just starting 2024. What do you think we're looking for in this year?
Yeah, that's a great question. So in a word, why did we go up in both the price of oil and equities, oil and gas companies, and then down? One word, Russia. It was the mother of all head fakes. I mean, when Russia invaded Ukraine in February of 2022, folks thought we were going to lose 3 million barrels a day of Russian supply. They're a big exporter. And crude oil prices would roof. And they did initially. But when they found out that the sanctions and so forth were not reducing Russian supply, all that premium came out. So that whole move up and move down was a big Russian head fake. But you asked about looking forward. Looking forward, and Rapidan just updated its 10-year oil market outlook. We see sort of steady as she goes over the next 2, 3, 4 years or so, meaning that demand is going to surprise to the upside. We don't buy for a minute this idea of peak demand by 2030 because of electric vehicles. We see electric vehicles coming, but we think the consensus has gotten way too optimistic about how fast we destroy demand for gasoline and diesel like in the next few years. So we see pretty healthy demand growth. And then OPEC plus, Russia, Saudi Arabia, UAE and Iraq, Kuwait, they have some spare production capacity, right? They've had to cut back. And so it's going to take, they have some oil they can bring on the market. Long story short, we see a fairly balanced market in and around $70, $80 crude. Where things get really interesting is toward the end of the decade. And here we're very different than most folks. We just see a boom cycle coming. I mean, boom is going to follow bust like night follows day. Because as we get to the end of the decade, we just don't see enough supply to keep up with demand growth. We're not investing enough now to meet demand growth toward the end of the decade, early 2030s. And that's when I think you have to buckle up for oil prices well into the $100 range.
Those who are not as knowledgeable think that oil companies can, at their will, raise the price of a barrel of oil so that when gas at the pump is going to $3 and $4 a barrel, $3 and $4 a gallon, they're thinking that it's the oil companies that are wanting to do that. Is that a fallacy?
It is a fallacy. By and large, it is a fallacy. Oil companies, especially private sector U.S. oil companies, are price takers. They can't influence the price. Congress has been investigating this. The Federal Trade Commission has been investigating this over and over again. They've never found evidence of collusion. So oil companies do not set the price of oil. While Exxon, Chevron, oil companies don't set the price of oil, it is also true that from 1932 until about 1972, officials in the U.S. set the price of oil. The Texas Railroad Commission, regulators, the state of Texas, they were the Saudi Arabia of the oil market. They're actually more powerful than Saudi Arabia.
Or the Oklahoma, OCC.
Oklahoma was the first one. They even started regulating before Texas. I love coming to Texas. I got relatives in Texas, clients in Texas, Louisiana, Oklahoma. I love that part of the world. And I asked myself, why did God put Texans on earth and Louisianans and Oklahomans? And I think he put them on earth for two great reasons. Guy worked for President George W. Bush, so you see where I'm coming from. Produce oil and limit the role of government. Since 1972, it has been by and large sort of Arab oil producing countries that have played that swing producer role. Many folks around today have forgotten that it was the United States doing it, and most successfully, I should add. So while it's true oil companies don't set the price of oil, government regulators can. They try and stabilize the price.
I've read where we're producing 20 million barrels a day. And I've also read where we're producing 11 million barrels a day. Well, that's a big price swing. What is the true information? I mean, how much are we producing and how much are we needing to consume every day for what we need for oil?
Okay, so we're producing total about 20 million barrels a day, but that includes things like natural gas liquids and biofuels and other things. So we produce about 13 million barrels a day of crude oil. Okay, that's the real number I should probably focus on. So the United States is a net importer of the crude oil. Why? Because not all crude oil is the same. Our refineries are tuned to use sort of like coffee ground, heavy, sour, gunky oil that they produce in Venezuela and Mexico and Canada. Okay.
Mm-hmm.
Our refineries aren't suited to the champagne quality oil that's the US shale production and the Permian and so forth. So we find it better to export our crude oil and import crude oil in our refineries. But where we're an exporter, a net exporter, is on the product side. We sell a lot of gasoline, we sell a lot of diesel. And with the sanctions going on and everything, the Europeans are happy for it, along with the liquefied natural gas for that matter. Because I think there's another fallacy. There's this fallacy that says if we just produce enough, if we just don't have to rely on foreign supplies, we'll have stable prices and we won't have to worry about anything in the world going on. That's completely wrong. It's completely wrong. The thing we care about the most is the price of oil, not where it comes from, because it's the price of oil that can kill our economy. In 2019, in September, when Iran attacked the most valuable oil facility in the world, the Abqaiq stabilization plant in Saudi Arabia, on September 14th of 2019, it was a Sunday night, the day after, the market's getting ready to open. President Trump, when he went on TV or went on the radio and tried to calm everybody down because the market was about to open, we had the biggest one-day move in crude oil that day afterwards. It doesn't mean that we can sort of insulate ourselves from oil price volatility. And that's what consumers care about. That's what businesses care about. And that's what elected officials care about.
Iran has taken over through Houthi rebels, have taken over the St. Nicholas oil tanker that they just happen to have been the same tanker that was the United States had found that Iran was violating sanctions on. But oil really didn't make that much of a fluctuation, and it was in the Red Sea. Is it because of the fact that it was location because of the Red Sea, because of excess capacity? Why didn't oil have that much of a fluctuation?
It's a great question. Also, over the holidays, Iran launched a drone that hit a Saudi oil tanker near India, and the market shrugged it off. It's a great question. So let's step back for a second. The oil market is shrugging off geopolitical risk. Traders are thinking, show me the barrels. Until I see a disruption in oil supply, I'm not buying it. When something happens, there's an escalation in the Middle East, but it doesn't last long, as you notice, or the market just blows it off. And that's because they've seen too many head fakes, and they're very skeptical.
Well, what about
going to see
Well, Bob, what about if let's say we were talking about the Red Sea, but let's say that same incident occurred in a location, let's say the Straits of Hormuz, or something that has more of a flowing of oil. Would we have seen a different price volatility?
Well, had they struck a ship with a drone in the Strait of Hormuz, yes, I think we would have seen more of a spike there, because traders understand the Strait of Hormuz is what matters. I mean, the Red Sea is a shortcut. It's an important shortcut, but it's a shortcut. You can go around a shortcut. Hormuz is a bottleneck. well over 20 million barrels a day, well over 25% of seaborne traded crude flows through there. Ditto with LNG. I mean, Hormuz is a heart attack. And were there to be more ship seizures or attacks on ships in the Hormuz area or the Arabian Gulf, the Arabian Sea close to the Strait of Hormuz, yes, I would think we'd see more price spikes in that case.
Former President Donald Trump was on because of the Iowa caucuses and such. And he brought up, he said when he was in 2019, Iran was almost bankrupt. But because in September of 2019, the sanctions went into effect with Iran. Well, now, from what I understand, Iran is producing something like in the area of about 3 million barrels a day. And they're now getting flushed with cash, which they are now using this excess money to fund terrorist organizations, the Houthi rebels, Hamas with Israel and such. First off, is it true that they were in desperate need of cash? They didn't have the cash, say, in 2019, but now they have so much extra cash, and they're doing about 3 million barrels a day?
Yes. President Biden basically has chosen not to enforce the sanctions on Iran. Iran's exports are high, especially the third quarter. They rose sharply. So they're exporting around 1.5 million barrels a day. I mean, they produce around 3.5, but it's really where they earn their dollars is on the exports. So you got to watch the exports. Under President Trump, those exports were almost nil. 500,000 barrels a day, 400,000 barrels a day. Now Iran has been exporting a lot more oil, especially to China, and earning the cash from that. So we have higher oil prices and their higher exports, and that has funded their adventurism. So on that point, President Trump is correct.
What about, are they using what known as ghost ships or ghost armadas, where they will use a ship, a tanker, turn off the transponder and flow through, hoping not to be found, and use a flag such as Malaysia or Panamanian or things like that to be able to undercut? Do we really know, but we're just turning a blind eye on it, looking the other way?
So they are definitely doing that, shadow fleets, and they've been joined by the Russians. I mean, the Russians are big time shadow fleet users, probably bigger than the Iranians now because of these sanctions on Russia. They've resorted to a growing shadow fleet to move about 2/3 of their oil, which is being exported largely to Asia. So shadow fleets are becoming very popular, not just Iran, but also Russia. And, we have the technology, the intelligence community. I mean, they see what's going on, and we can watch these ships now. We have capabilities that are almost free on X. So you can just, see these tanker trackers and satellites and so forth that you had to have a security clearance. I did 20 years ago to see. Now it's pretty much free on the internet. So yeah, we know what's going on. We're able to track this pretty closely. But, we're in a bind because I said, even though we're a big producer, 13 million barrels a day, even though we're a net exporter, we know that if we actually cut the Iranian supply of oil or we cut the Russian supply of oil, the price of gasoline will rise in the United States. And having worked for a president, doesn't matter, Republican, Democrat, the one thing they fear more than all things, especially in an election year, is a rising pump price. And so this, in a way, limits their ability to crack down on Iranian or Russian exports using these sanctions fleet.
OPEC is allowing, Saudi Arabia is now not allowing Iran and those Venezuela that are under sanctioned to also cut their oil. But if they're having these ghost fleets and these type of, they're making their money anyway because the United States is looking the other way. Do you think Saudi Arabia is going to go, no, since we have to do price cuts, oil cuts, we're going to make Iran, Venezuela, and all OPEC countries follow the same hymn book?
No.
Really?
No, OPEC, really this OPEC Plus, which is this new group of the OPEC that we know from the history, and then Russia and other countries, Kazakhstan, that are part of not an OPEC, but together they form OPEC Plus. No, they have a rule that if you're under sanctions or under geopolitical disruptions, so Libya, Venezuela, Iran, you get a pass. don't have to implement quotas.
What about, I mean, is Russia, which is part of the OPEC Plus, and now as of this year, or January, or maybe December of last year, Brazil is now part of the OPEC Plus. Do you see one day maybe Russia and possibly Brazil, because Angola's now out, from what I understand, so now they're down to, what, 12 OPEC countries. Do you ever see the day coming where Russia and Brazil joining OPEC?
So, first of all, Brazil hasn't joined as a member that would take a quota. They said they would maybe be an observer. So we want to be very clear. They have not joined up for the A team, like no kidding, real OPEC membership. They just said they'll be an observer.
Okay.
And no, I don't think Russia will join OPEC per se. I think they like to maintain the image of being outside of that group. That group is really led by the Gulf producers, Saudi Arabia, UAE, Kuwait. And so they don't need to. I think what's most important for Saudi Arabia, especially, is that when needed, Russia contribute to cuts. There's been a tension and a debate going back decades where Saudi Arabia has always tried to get Russia to convince them at times when the oil market is weak to cut. And it took a while, but they finally got them to succeed in 2016. And if the consolation prize is Russia doesn't join OPEC, but they're part of this new group, that's a compromise I think both sides are happy to live with.
What about refineries, Bob? We have, from what I read, so we have about 135 or so operating refinery facilities in the United States. Is that enough refineries to be able to keep up with the demand that you said that we're going to be needing more of? And would it be right to assume that there's no way we're going to get a permit for new refineries with this administration? What are your thoughts on that?
So when it comes to the refineries, we're in a better shape, both in the United States, certainly, and even globally, than we are what we call upstream or with producing the oil. Mm-hmm. Refineries are easier to build and they're easier to expand, right? Even in an existing refinery, you can increase the capacity. So while it's true that we haven't really permitted brand new greenfield refineries in the United States, we probably don't really need one. And we have been able to increase refining capacity at the existing ones. So the challenge right now is not necessarily can we get the Biden administration to permit another refinery? It's more, will we be allowed to produce in federal waters? Will they prevent us from importing more from our friends in Canada because we can't get cross-border permits for pipelines? Will we increase the costs for environmental regulations and so forth beyond what's reasonable, et cetera, et cetera. So these are the bigger issues I think the industry is confronting. It's more on the oil side.
Since the Russian war with Ukraine, we have been supplying a lot of LNG to Europe, especially Germany. Do we have enough abilities to be able to, and by the way, from what I understand, we're now the #1 exporter of LNG, and we overtook Qatar and overtook Australia, which we were at one time #3, now we're #1, if I'm correct. Do you see that, do we need more facilities to be able to produce more LNG, and are we able to do it with permitting problems that may come up with the administration?
Right, so very worried about political risk to our ability to export LNG. And if you've seen in recent weeks and months, and there's more press attention on this, the environmental community has decided to make a big push to actually stop a facility in your neighborhood, and I want to pronounce it correctly. Calcasieu.
You're very, very close. Calcasieu. That's it. That's okay.
Calcasieu Pass #2. Okay. The environmental community has decided to make this like the Keystone XL, the symbolic big battle. And they've said they are, in the recent weeks, they've come together, written letters, pressure through Congress, pressure on President Biden saying, we want you to deny a permit to Venture Global to complete Calcasieu Pass #2. You know, what this ignores is that gas is often shutting down coal, so it's reducing emissions. But parts of the environmental community don't want any more gas at all. It doesn't matter. They just want total solar and wind. And so this is brewing. This is getting up to be a major battle. Stay tuned and pay attention to Calcasieu Pass. It's going to be become a sort of a household name in the way that Keystone was, some 10 years ago when that cross-border permit came in. But you got to respond to the market. You got to respond to the market. And if we get to later this decade and renewables have not grown as fast as folks think, and we're sanctioning Russian exports still in Europe and so forth, there will be stronger demand for U.S. LNG. And it's very important that we continue the export facility. Andre, one of the sort of man bites dog's happy stories here is that really under President Obama, and you have to give credit to him, President Obama in the Obama administration was a sort of all of the above export-oriented administration. They allowed crude oil exports and they allowed LNG exports and liberalized that. They understood that our ability to export LNG and oil was a good thing from national security perspective, from an emissions perspective, and from an economic perspective.
Bob, I had a great time. I hope you come back.
Thank you very much for having me, Andre. Really appreciate it. Great questions. Thank you for having me.
Thank you, Bob. Hey, if you've got a question, maybe a comment about the show, we'd love to hear from you. Make it concise, make it piffy, and write us at andre@benacapital.com. And now for our wrap-up on Wall Street. Well, are you one of the many who saw the movie The Wolf of Wall Street? It was a hit movie a couple of years ago with Leonardo DiCaprio about a con man named Jordan Belfort on Wall Street and how he swindled millions of dollars out of unsuspecting investors. But here's the backstory of the money that was used to finance the movie. It was all stolen by a swindler named Jolo. He was a financier who swindled over $1.4 billion from Goldman Sachs and the country of Malaysia, which was much more than Jordan Belfort ever stole of the real Wolf of Wall Street. Now, there's a new movie out about that theft of just over $1.5 billion and how Jolo partied with Leo DiCaprio and Paris Hilton, and well, you could say he partied like a rock star on other people's money. Now, we've got the director of the just-released movie Man on the Run, Cassius Kim, next week. And by the way, Jolo, he's still on the run. And he's still running with over $1 billion of OPM, other people's money. And that's a wrap-up on Wall Street Wrap-Up. Our thanks to Bob McNally for being with us tonight. But as always, it's you we appreciate for allowing us into your homes this evening. Have a fun weekend with the ones you love. Remember, if it's Friday, it's Wall Street Wrap-Up. I'm Andre Laborde, and always remember, money never sleeps. Good night.
Wall Street Wrap-Up is supported by Bamboolas, featuring live music. And now, tapas and wine upstairs. Bamboolas, the heartbeat of Frenchman Street.